Who's winning in this economy right now?
The rich, guys like me. You know, we have gone from having 93 billion, top 400, in 1982 to having 2.4 trillion, 25 for one.
Did you know that during the 2008 financial crisis, while many investors faced devastating losses, Warren Buffett's Berkshire Hathaway saw a staggering increase in its investment value? In a time when the stock market plummeted by nearly 50%, Buffett's company invested billions into companies like Goldman Sachs and General Electric, reaping enormous profits. In addition to being a story about financial strength, this is a great example of how to invest in a way that will not lose money during a recession. Today, we're diving into the Oracle of Omaha's playbook for the anticipated 2024 recession. How does one of the world's most successful investors handle economic downturns, not just to survive, but to thrive? Let's uncover the secrets.
I think, well, this could be the beginning of something really bad. It could be even a World War III situation. It could be a return to the Cold War. Does any of that ever go through your mind?
Well, if you tell me all of that's going to happen, I will still be buying the stock.
Let's first talk about the overall economic situation in 2024. This year is turning out to be quite the roller coaster in the world of finance. It's like we're all part of this giant global economic experiment, with various factors playing their parts in shaping what's to come. Now, according to a report by the World Economic Forum, we're still dealing with the aftershocks of the pandemic. Basically, it is like a long, drawn-out movie sequel for the economy. There are countries that are doing better and countries that are still trying to find their footing. The global economy is like a jigsaw puzzle because of how unevenly it is recovering. This is why investors need to keep an eye on different regions and their own unique economic stories. Then, there is the global political drama. The Economist Intelligence Unit says that trade disputes, political unrest, and conflicts in different parts of the world are making the global economy less stable. Like a very important game of chess, each move changes everything from the price of oil to the cost of your morning coffee. Warren Buffett, the Oracle of Omaha himself, often talks about the importance of seeing the big picture. In his famous letters to shareholders and various interviews, he's like the wise uncle who reminds us to focus on the long game, not just the daily score. In 2024, this means keeping an eye on inflation, spending by consumers, and the growth, or their lack of the world's economies. Now, let's talk about the R word, recession. Bloomberg's economic forecasts are hinting at a possible downturn. It's like seeing storm clouds on the horizon. But here's where Buffett's wisdom comes in handy. He sees these downturns as shopping opportunities in the stock market, where you can pick up valuable assets at bargain prices. And we can't ignore the tech revolution. A McKinsey & Company report highlights how tech advancements are reshaping industries and opening up new investment frontiers. Buffett, traditionally a bit cautious about tech, acknowledges its growing influence. Inflation is another hot topic in 2024. The International Monetary Fund, IMF, is talking about rising prices in many places. Buffett's advice? Look for companies that can still make a profit even when costs go up. Alright, let's zoom into the stock market in 2024.
Where we've come?
Well, anytime stocks go down, as far as I'm concerned, I like it because I'm a net buyer of stocks. I've been buying stocks ever since I was 11 years old. So when stocks go down, it's good news. Just like when hamburgers go down, it's good news, or Coca-Cola goes down, it's good news in terms of anything I buy.
First off, the stock market in 2024 is really something to behold. It's like a roller coaster with its ups and downs, twists and turns. According to a report by Goldman Sachs, we're seeing some pretty significant volatility. It's not just your run-of-the-mill market fluctuations. We're talking about big swings that can make or break fortunes in the blink of an eye. Now, Warren Buffett, the master of investment, has always had a fascinating take on the stock market. He compares it to a voting machine in the short term and a weighing machine in the long term. What he means is that, in the short run, the market is all about investor sentiment. It's fickle, reactive, and often driven by emotions. But in the long run, it's the company's actual performance that counts. So, for those playing the long game, like Buffett, it's all about picking stocks with solid fundamentals and holding onto them through the market's mood swings. But here's where it gets interesting in 2024. As a general rule, new industries are putting pressure on established ones. Think about green technology, renewable energy, and the whole digital transformation wave. These sectors are like the new kids on the block, shaking things up and offering exciting new opportunities for investors who are willing to bet on the future. However, it is not all sunshine and rainbows. There's a word of caution from financial analysts at JP Morgan who remind us that with great opportunity comes great risk. They're talking about the potential for overvaluation in some of these hot sectors. Investors need to be savvy, doing their homework to separate the real deals from the hype. Buffett himself has always been a proponent of value investing. He does not usually follow the latest trend without first doing his research. His approach in 2024 remains consistent. Look for companies with strong business models, healthy balance sheets, and the potential for long-term growth.
They're the businesses that you buy once, and then you don't have to keep making capital investments subsequently. So you do not face the problem of continuous reinvestment involving greater and greater dollars because of inflation.
As we've already explored the predicted economic conditions for 2024, it's evident that we're on the cusp of some significant shifts, particularly in the real estate market. This sector, often seen as a sign of broader economic health, is poised for some intriguing developments. Historically, the real estate market has been relatively resilient, with only a few instances in the past 60 years where home prices have suffered major declines, dropping over 15%. However, the current climate suggests we might be heading towards a notable adjustment. Experts on Wall Street, keeping a close eye on market trends and economic indicators, are forecasting a potential nationwide decrease in housing prices, possibly in the range of 5 to 10%. In a more pessimistic scenario, especially if interest rates continue their upward trajectory, we could witness a more pronounced decline, ranging from 10 to 25%. It's important to remember, though, that real estate is inherently local. Some markets are more susceptible to fluctuations than others. In these vulnerable areas, if a dip does occur, it might take a couple of years for the market to stabilize and recover. For homeowners, particularly those with fixed-rate mortgages who aren't planning to move in the next 5 to 10 years, these market movements might not pose a significant concern. Their focus is likely more on the long-term value of their property and the stability it offers. However, for real estate investors or those contemplating new purchases, this period could present some attractive opportunities. The market is likely to offer some compelling deals, especially in areas where prices adjust more significantly. From what we can tell now, the real estate market in 2024 will likely be a mix of challenges and opportunities. There may be good investment opportunities for people who are ready to deal with these changes. The real estate market in 2024 is a great place for smart investors who are ready to adapt to changes in the economy to make money, whether they are taking advantage of lower prices in some areas or market trends. Apart from investing, one must hold some cash too. So, here's a question for you. Why would anyone want to sit on a pile of cash, especially in a year like 2024, when the financial world is buzzing with opportunities? It might seem like keeping cash is the equivalent of parking your car in the garage during a road trip, but there's more to this strategy than meets the eye. Let's break it down. Holding cash in the investing world is like having a secret weapon in your arsenal. It's not just about playing it safe, it's about being ready to strike when the iron is hot. In 2024, with the market swinging like a pendulum, having cash gives you the flexibility to jump on opportunities that others might miss because they're tied up in other investments. Now, you might be thinking, but isn't cash just sitting there, doing nothing? Well, not exactly. Think of your cash as a strategic reserve. It's the financial equivalent of keeping a spare tire in your trunk. Sure, it's not in use all the time, but when you hit a pothole, you'll be glad it's there. Let's look at some facts and history to back this up. Remember the 2008 financial crisis? It was a time of panic and turmoil in the markets. But guess who came out on top? Investors who had cash. They were able to buy assets at rock-bottom prices, while others were selling in a frenzy. Warren Buffett, the Oracle of Omaha, is a classic example. His company, Berkshire Hathaway, had a cash reserve of billions, which allowed them to make opportunistic purchases during the crisis, leading to substantial gains in the following years. But wait, there's a flip side to this. Holding too much cash, especially in a year like 2024, where inflation is a lurking shadow, can be like holding a melting ice cube. The purchasing power of your cash can diminish over time due to inflation. So, while it's smart to have cash on hand, it's also wise not to overdo it. Finding the right amount of cash is very important. You should have enough to take advantage of opportunities and have a safety net, but not too much that you miss out on the growth potential of other investments. Let's take a fresh approach, focusing on the unique opportunities that the upcoming economic climate presents while keeping it engaging and informative. So, here's the thought. When the economic seas get choppy, as they seem to be in 2024, how do you turn potential turmoil into a treasure trove of opportunities? It's all about smart strategies and a bit of creative thinking. First off, let's talk about sticking to your investment plan. Think of it as your financial GPS. It might be tempting to pull over and wait out the storm, but what if I told you this could be the perfect time to keep moving? This is where dollar cost averaging comes into play. You keep investing a fixed amount regularly, no matter what the market is doing. So when the prices are down, you're actually scooping up more shares for the same amount of money. Now, let's spice things up with diversification. By combining various types, for example, stocks, bonds, international assets, and maybe a bit of real estate, you are not relying on a single performer to impress the audience. And here's a pro tip. While you're navigating these economic waves, why not paddle a bit harder? This could be the perfect time to kickstart a side hustle or ramp up your career game. It's like adding an extra engine to your financial ship. Whether it's freelancing, launching a small business, or upskilling for a promotion, these extra efforts can translate into additional funds for investing. In essence, the upcoming economic scenario, while challenging, is packed with hidden gems for those willing to mine them. Stick to your investing plan, spread your money around to dance to different beats, and put in the extra effort to fuel your financial journey. History tells us that the economic tides will eventually turn, and when they do, you will be on a stronger, more stable financial boat, ready to ride the next wave of prosperity. As we come to the end of our look at the financial world in 2024, remember that every problem has a solution. You can use these rough times to your advantage by being disciplined with your investments, diversifying wisely, and putting in extra work to fuel your growth. So, tell us in the comments, what's your strategy for navigating the economic waves of 2024? Share your thoughts, and let's get through these rough waters together.